Delorean's Alpha 5 is going Web 3 with DMC tokens on the Sway blockchain. Plus, experts debate if alt season is really here and how to find the next 100x memecoin. Will Bitcoin hit new all-time highs? Find out now. In the latest video from Altcoin Daily, Evan, president of Delorean Labs, discusses the upcoming launch of the Alpha 5, a fully electric vehicle, and its integration with Web3 technology through the DMC token on the Sway blockchain. The Alpha 5 is slated for a 2027 release, with reservations currently available for purchase on marketplace.delorean.com. The DMC token launched on June 24th on over 12 exchanges. The initial build slots for the Alpha 5, priced at $2,500, have already sold out, with the car itself expected to retail between $200,000 and $300,000. The DMC token will power the Delorean ecosystem, enabling staking, facilitating transactions on the marketplace, and granting access to exclusive merchandise. The video also mentions the integration of a crypto wallet within each vehicle, allowing owners to potentially earn by sharing data. Delorean's entry into the crypto space is intriguing, particularly its choice of the Sway blockchain. While Sway is a newer blockchain, its scalability and ease of use could make it a good fit for Delorean's ambitious plans. However, the long lead time until the Alpha 5's release and the volatile nature of the crypto market presents significant risks. It will be interesting to observe how this project unfolds and if it paves the way for other traditional brands to embrace Web3 technology. In the latest video from Crypto Rover, Bitcoin's price is discussed, noting a lack of trader interest. The host points out Bitcoin's correlation with the stock market, suggesting Bitcoin will reach new all-time highs. However, President Trump's tariff boss ending in 12 days may bring bearish news. The host analyzes the Bitcoin chart, observing a downtrend within a larger consolidation range. They believe this is a bull flag pattern forming over 40 days, and a liquidity grab is expected before a major breakout. Crypto Rover predicts Bitcoin will hit $135,000, detailing their Ethereum trade with targets at $3,000 and $4,000. They point out increasing Ethereum transaction counts and a bearish divergence in Bitcoin dominance, predicting an altcoin season is near. Crypto Rover's optimism is infectious, but current news paints a different picture. While the stock market and Bitcoin often correlate, global uncertainty might decouple this relationship. The end of the 90-day tariff boss could negatively impact markets, and even a trade deal with China might not fully offset broader economic concerns like inflation and potential interest rate hikes. Also, his Bitcoin price target of $135,000 seems overly bullish, especially considering recent regulatory scrutiny and market volatility. The projected alt season is interesting, but the crypto market has surprised us before, so it's important to stay informed and be cautious. In the latest video from Lark Davis, he discusses the Federal Reserve's decision to hold steady on interest rates while other central banks are cutting theirs. He points out that this wait-and-see approach creates a unique market situation, especially given the current economic climate in the U.S. He mentions that inflation is around 2% and unemployment is near a 50-year low, yet the Fed remains hesitant to cut rates, citing the need to assess the impact of previous tariff policies. Davis argues that this hesitancy could actually set up the next big crypto rally. He explains that historically, lower interest rates tend to boost crypto markets, particularly altcoins, as investors become more willing to take risks. He references a Gemini report indicating that it typically takes around 9 months for these policy changes to fully affect the crypto market, suggesting a potential surge in altcoin prices later in the year. Davis also notes Bitcoin's resilience in the current high interest rate environment, attributing it to its increasing acceptance as a store of value. The relationship between monetary policy and crypto markets is complex. While lower interest rates generally stimulate investment in riskier assets, including crypto, other factors like regulatory developments and overall market sentiment also play a significant role. It's also worth noting that the crypto market has matured considerably since the last bull run, with institutional involvement increasing and a greater focus on utility and real-world applications. This could potentially lead to different market dynamics than what we've seen in the past. In the latest video from Ben Cowan, he discusses why alt season hasn't started yet, comparing the current market to the 2017 and 2020 to 2021 cycles. He explains that alt season is defined by Bitcoin dominance decreasing while altcoins increase in USD value. Currently, Bitcoin dominance is increasing, indicating a Bitcoin season. Cowen analyzes the total 3 minus USDT divided by Bitcoin chart, noting that altcoins haven't devalued enough against Bitcoin to trigger an alt season, similar to his observations in a video 4 months prior. He suggests two potential paths: a rapid devaluation of altcoins or a slow decline continuing until November. Cowen explores the factors influencing the market, including quantitative tightening, QT not yet ending, and interest rate cuts not having the same impact as the previous cycle due to a higher terminal rate. He also mentions how the Advanced Decline Index for crypto shows only a few cryptos are responsible for overall market cap growth, highlighting the liquidity drain from altcoins to Bitcoin. He uses examples of Solana, Ethereum, and Avalanche showing their lower prices compared to 4 months ago, despite Bitcoin nearing all-time highs. He expects all Bitcoin pairs to potentially reach the 0.25 range low, a key indicator for alt season sometime later this year. He believes that until there is a significant change in monetary policy, including the end of QT and further rate cuts, and altcoins truly devalue to the point of widespread capitulation, a sustained alt season is unlikely. Cowen's analysis resonates with the current crypto market sentiment. The crypto landscape is indeed dominated by Bitcoin's price action, with many altcoins lagging behind. The discussion about the impact of macroeconomic factors like interest rates and quantitative tightening adds another layer to understanding the dynamics at play. It seems likely that the anticipated altcoin surge may take longer to materialize than many initially predicted. However, it's worth noting that market predictions, especially in the volatile crypto space, should be viewed with caution. The interconnected nature of global finance and the crypto market's susceptibility to unforeseen events mean things can shift rapidly. In the latest video from Coin Bureau, Guy explains how to find the next 100x meme coin. The SEC's statement that most meme coins aren't securities has changed the market. Now, launchpads are key, not just the blockchain. He suggests looking at launchpads with strong crypto connections on fast, cheap blockchains like Solana, Sway, or Toncoin. Older, sleeping meme coins with active communities might also offer big returns, especially those fitting emerging narratives like cat or food-themed coins. He points out that retail investor activity is high, suggesting another meme coin season is possible, especially as Bitcoin's price rises. I think the points about launchpads and sleeping meme coins are interesting. It makes sense that established connections could give some meme coins an edge. Also, the idea of looking for older coins with active communities is a new angle I hadn't considered before. However, it's good to remember that meme coins are highly speculative, and no one can guarantee which will succeed. In the latest video from Cryptozoodros, George answers 5 viewer questions. He explains Chainlink's CCIP, enabling USDC transfers across various chains, and clarifies how stablecoin transfers don't affect underlying collateral. He discusses profit-taking strategies in Bitcoin, emphasizing personal financial situations and risk tolerance when considering borrowing against assets. George advises against borrowing heavily for crypto investments, citing potential market downturns and interest risks, and reminds viewers that billionaires like Michael Saylor have different risk profiles. He analyzes Coinbase stock's recent surge, highlighting its connection to Circle and inclusion in the S&P 500, while reaffirming Bitcoin's long-term potential. Finally, he addresses the concept of over-the-counter (OTC) trading and its impact on Bitcoin's price, drawing an analogy to garage sales and emphasizing Bitcoin's scarcity as the ultimate driver of its value. Bitcoin price is predicted to reach between $200K and $250K. The discussion around taking profits versus holding is always interesting. While long-term holding has historically rewarded Bitcoin investors, having a cash reserve to capitalize on potential dips can be a smart strategy. However, borrowing against assets, especially volatile ones like crypto, can be a double-edged sword. The analogy of garage sales to explain OTC trading was quite clever. It effectively illustrates the dynamic nature of the market and how scarcity eventually drives up value, even with fluctuations in OTC activity. The current regulatory environment in the US is certainly creating a buzz around crypto and related stocks like Coinbase. This could drive further investment and innovation in the space.